Nvidia secretly bought nearly 10% of a European AI company. Nobody knew. Until an SEC filing made it public. Then the stock jumped 19% in a single day. Here is what Nvidia just told us about where the AI money is going next. A company called Nebius Group trades on the Nasdaq. Most people have never heard of it. It's an AI cloud infrastructure company based in Amsterdam. It was originally the parent company of Yandex, Russia's largest search engine. After the war in Ukraine and sanctions, the Russian business was sold off completely. What remained became Nebius, a pure-play AI data center company, building compute infrastructure across Europe and the United States. Think about that transformation for a second. A company built around a search engine, sanctioned and severed from its own biggest market, rebuilt itself entirely around renting out AI computing power. That's not a pivot. That's a company that had to become someone else to survive, and it worked. This week, the world's most valuable company revealed it owns close to 10% of it. On March 11, 2026, Nvidia put $2 billion into Nebius. At the time, it was framed as an infrastructure partnership. Nvidia helping Nebius build capacity. Nothing unusual. But part of that deal was a pre-funded warrant, a financial instrument giving Nvidia the right to convert its investment into equity later, largely at a price already agreed in advance. Nobody outside the two companies had a clear picture of what that meant in terms of actual ownership. Not until the paperwork caught up. On July 13, Nvidia filed a Schedule 13G with the SEC. A 13G specifically means passive investor, not seeking control of the company. A 13D would have signaled something much more aggressive. Nvidia chose the quieter filing, on purpose. That filing revealed Nvidia now holds 22.2 million Nebius shares. A 9.3% stake. Roughly $5 billion, at current prices. The filing became public on July 20. The stock jumped nearly 19% the very next day. The market had known about the partnership. It had not known Nvidia had quietly turned it into almost 10% ownership. 2 ways in. 1 9.3% stake. There's one detail in the filing most coverage missed. September 11, 2026. That's the date Nvidia can first exercise the warrant, or sell any shares. Before that, Nvidia cannot sell a single one. This is actually the most bullish detail in the entire story. A seller who legally cannot sell is an endorsement that can't be walked back. Nvidia locking itself in until September signals a kind of commitment a press release could never fake. Compare that to what usually happens when a big investor discloses a stake. Often, the very next question is, when do they start selling? Here, that question already has an answer. Not before September 11. By law. That single date turned a filing that could have read as Nvidia is testing an exit into the opposite signal entirely. The market understood that immediately. Nearly 19%, in one session. Revenue grew 684% year-over-year, in the first quarter of 2026. Not 6%. Not 60%. 684. Its AI business specifically grew even faster, 841%, year-over-year. Nebius says it sold out its entire available capacity. Demand is outrunning supply. It's building data centers in Finland, 310 megawatts, one of the largest dedicated AI facilities in Europe. Another in France, near Lille, 240 megawatts. Plus sites in the US and UK. Its customers include Microsoft and Meta, worth a combined $40 billion plus in contracted revenue. Adjusted earnings, EBITDA, jumped to $130 million, up from just $15 million the previous quarter. Operating cash flow, $2.3 billion, a full turnaround from a cash outflow the same quarter a year earlier. Nebius also secured enough power and land for a new AI factory in Pennsylvania, up to 1.2 gigawatts, its first major US site. 16 analysts cover this stock. 10 rate it buy or higher. The average price target implies about 42% upside from today. One of those analysts, at Freedom Capital, upgraded the stock this same week, from hold to buy, raising the target from 150 to 200. Their reasoning, the stock had already fallen 40% from its June peak, and most of that downside was already priced in. This is not the first time Nvidia has done this. Nvidia holds a 7% stake in CoreWeave, another AI cloud company. Nvidia's relationship with CoreWeave actually goes back further than most people know, $100 million in 2023, before CoreWeave had even gone public, then another $250 million right before its IPO. On top of that came a $6.3 billion backstop agreement, originally signed in 2023, but only revealed publicly in an SEC filing in October 2025. That backstop guarantees CoreWeave a minimum level of revenue through 2032, whether or not it can sell all of its own capacity. Nebius, now 9.3%. Tied to a $2 billion investment from March. The pattern is clear. Nvidia sells GPUs to cloud companies. Then it takes equity in those same cloud companies. So when a cloud company makes money using Nvidia's chips, Nvidia benefits twice. Hardware revenue when the chips sell. Capital gains when the company grows. No other chip company has positioned itself on both sides of that transaction quite like this. Notice what's happening in Europe this same week. Microsoft just committed billions to expand Mistral's GPU infrastructure in Europe, thousands of Nvidia's newest Vera Rubin chips, its most advanced architecture yet. That deal also covers new Mistral models inside Microsoft's own products, and deployments that can run fully disconnected, for regulated industries that can't put data in a public cloud. And in the same stretch of days, Nvidia revealed a nearly $5 billion stake in Nebius, which is building data centers across Finland, France, the US, and beyond. Two separate announcements. 1 week. Both pointing the same direction. European AI infrastructure is where serious capital is moving right now. And Nvidia is positioned to benefit from it as a supplier, and as an owner. Nvidia sells the picks and shovels of the AI build-out. That was always the story. Now Nvidia is also buying stakes in the mines. When you sell the tools, and own part of the company using them, your upside stops being limited to how many tools you sell. Jensen Huang understood that before most investors had priced it in. It also changes how you should read every future Nvidia customer announcement. The question is no longer just, who's buying Nvidia chips? It's, which of Nvidia's customers does Nvidia also happen to own a piece of, and how much of that relationship is quietly quiet until the next filing? An SEC filing just made one of them visible. It's very unlikely to be the last. Subscribe for daily AI coverage. Comment below, is Nvidia taking equity in its own customers' smart strategy, or a conflict of interest? And did you know Nebius existed before today? Tell me below.